Hi everyone, Natu here again, back with another video. And in this video, I'm going to tell you the 3 real estate transformations that people who raise capital make. In helping hundreds of people either set up their funds, raise capital, and build private placement memorandums, get compliance systems and introductions to private equity firms, raise in excess of almost $200 million through the connections people were able to make. This is all via raises.com, by the way. In seeing all these things happen, we've seen a few patterns, and I'm not sure if these patterns have caught on, and I'm not sure if a lot of people recognize these patterns, but they're pretty much 4 different transformations that people make in a business when it comes to raising capital, especially for hard assets. And by hard assets, I mean mainly real estate or businesses with a lot of collateral. But I'm just going to focus, for the purpose of this one, I'm just going to quickly talk about the people who raise capital in the real estate sector for private equity, and significant amounts in excess of 100 million, down to even small deals. So really the first transformation that people make is going from basically from somebody, and we don't really work with many of these individuals, but people who just invest their own money into rental properties. So this is really beginning of market stuff. Like the average Joe Blow who's like, okay, let me invest in some real estate. Let me just buy a house that isn't mine and rent it out. So that's really the first transformation. The second transformation is people who go from investing their own money in real estate to doing a syndication. Because a lot of people we talk to, they may be bored and tired and limited by the fact that they can only invest their own capital into real estate, and they can only invest their own money into the deals. But they want to actually, buy apartment complexes and buy bigger deals. And maybe there's some situations where they'd rather do a private equity raise or private equity fund or private equity syndication. Because sometimes people can do, purely debts. Some people may use purely debts to acquire a big, bunch of houses or bunch of units. But then many people are more comfortable using equity to do so for various reasons. Some reasons may be the freedom, the actual, lack of leverage, and the lack of risk. Because more leverage sometimes can mean more risk. Now that interest rates, especially after things have slowed down after the whole coronavirus, things are picking back up. The interest rates are going back up. And a lot of people are going back to equity. So what we're seeing is people who want to raise capital by bringing in a group of investors to fund a deal, and they want to raise capital of equity. And so because a lot of people haven't raised equity with other people's money before, and they're looking to do this in a serious way like the investment bankers do, they typically have to do a private placement. And so these are the types of people, these are one of the primary types of people, one of the first clients at raises.com. People that have already had money in real estate, and then they want to use other people's equity, to raise capital to buy, apartment complexes, large plots of land, what have you. And so the third transformation are people that have already syndicated. So let's say you've raised less than $10 million in syndications, and you want to actually raise $10 million plus. So these are more sophisticated types of investors, or people that have been in real estate who want to raise capital just like the investment banks raise capital. And they want to build a fund that has all the bells and whistles with their fund, including, the appropriate network. Raising $100 million is not a joke. And so the type of things that people, and the type of analyses, the type of underwriting, the type of complexity, the type of offerings, even the ability to go public, these things are typically available to people who do a small syndication of $2 million. If you're raising a $75 million transaction, you would need some of the best tier 2 investment bankers and use their knowledge to fill in gaps in relationships, especially, and things that you do not know, because not many people operate at that level. 3 types of transformations that people usually make when they work on raising capital. And number 1, real estate syndicator, or number 1, average Joe Blow to a real estate investor. Number 2, real estate investor to a real estate syndicator. And number 3, real estate syndicator to an asset manager, raising capital like an investment bank for a more sophisticated fund. And if you're anywhere, especially in the second or in the third phase of it, just head to raises.com and we'll take care of you, because we've seen this pattern over and over again. So those are generally the transformations people make. And if you like this video, if it's on YouTube, hit that like button and subscribe. So with this, we'll see you in the next one.